Welcome back, guys, to Trap Wave Trading. I'm breaking down US 30 and how I caught these positions. So as usual, I start on the higher time frame to frame the narrative of my trades and work well made down. I do trade on intraday level, but it is good to always frame my trades on the higher time frame. I normally don't go as high as the weekly. I normally stay on the 4 hour and the 1 hour. But for the sake of this video and this breakdown, I will be starting on the weekly. So what we can see is we are in a bearish market. We have just swept these lows from June. And if we look to the left, we can see we have just taken out major liquidity pools. This being what you can see on the screen I'm highlighting. And we have just entered this FVG area, which is a fair value gap. And you can see we've reacted quite nicely within this zone. And we are pushing back up. What I would like to see is a retracement to this zone, which actually led to the break. And from here, we can get some continuation sells. So this is what I can see on the weekly and how I'm framing the narrative of my trades. So I am majorly looking for longs. And if I can get some longs, I will be holding them. But usually my trades do come from an intraday level. So I normally enter and exit on the same day. So let's go down to the daily, which we can see here. Like I just said, we've just taken out liquidity zones. We are accumulating here, so I do expect price to push up. Looks like we've made a low. We are on a Monday at the moment, and we have made a low already. And the way I trade and the way I analyze, I do expect the high to be formed of the week, Monday, Tuesday, Wednesday. So let's actually break down into the sell I actually caught today, the buy and the sell, and explain to you what I've been looking at and how I frame the trade. So as you can see, there's some purple boxes on my screen, which represent, not purple boxes, you've got purple, pink, blue, light purple, and yellow. So these represent session timing. So this is Asia, Frankfurt, London, but I'm pre-New York and New York. Okay, so the way I've caught this trade today was a model which I've used is the swipe of Asia liquidity and a reversal. So firstly, I determined this is the high of Asia. Okay, so that's our first pinpoint. So when I woke up, obviously I'm in the UK, so 7 a.m. Or about 6:30 is usually when I get on the market. And once I've seen the swipe of Asia, I look for the next FEG. So on this screen, we can actually see the FEGs here. So this is really easy trade. We could even be called a limit-based trade. But I did market execute, and this is essentially how I took the trade. So off the 5-minute, I could see this area has not been tapped into. So when price did aggressively take out Asia, I knew it was going to react from somewhere. And that is the trade I took off the 5-minute. Now, you could argue I could have decreased my SL to here just from the wick to the body, because I do expect a sharp retracement. But for this example, I just went with the 5-minute. I did personally take it on the 5-minute, and it did smash TP. It did take quite a while. I thought it was going to hit it straight away, but it did not. But nevertheless, it did hit TP. And the reasons why I chose this area of liquidity is if we go back on the 5-minute, we can actually see that this OB in here led to the break of this session high. Okay, so when I'm framing the idea is in here was the liquidity that led to the break of Asia high. Okay, then we had the retracement from this back down to here, right? And then at here, I'm expecting price to go back up, and that is exactly what had happened. So then I took another trade from here, knowing that this area actually led to the break of structure. I expected this and then to continue higher again. Typical model. And this is how I framed the trade, and that is why the TP is essentially at the low of here. Okay, so when price did come back down, I had my entry here, and I had my SL a bit lower than the lows, right? Just in case we did sweep the lows. Okay, so my entry was like this. So I gave a forgiving SL, just because I do see, even though this does hold weight, we do see sometimes that it does wick below. To take out this liquidity as a fake boss, then we flick up. So that's why I protected my SL just by making it a bit bigger, and going off this SL to the left, which was the doji, which we can see here. And usually what I do is I do look to the left to see, okay, what could have happened, right? And now if this trade had failed, I would have looked to take a trade within this FEG area here. So for price to come in and do the exact same thing. Okay, like I said, on the higher time frame, I am expecting retracements as to why I wanted to get in the buy, and I did TP full volume at this level. Right now, the target for this was literally this high. It was a small intraday trade. It does say 1 to 19, but for what I risked and how the SR worked out, I think it was about 1 to 12. And simply, we had a nice reaction, and price continued higher. You can see once price actually took out this high, we did have a small pullback, and then price essentially just wanted to continue higher. In hindsight, the trade would have been an absolute monster if I continued up, but I am an intraday trader, as to why I have strict TPs and SLs, because I want to get in and out of the market and I don't want to spend hours each day on the market. So that is a breakdown of my US30 sells into buys using purely liquidity based entries with FEGs. Thank you guys for listening, and subscribe, like, and join our free Telegram, where we do share ideas every day about our entries and why we enter. And you can reach out to us personally on Telegram and we can answer any questions you have. And that's a wrap. Thank you.